Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to talk about Bitcoin and the idea of being cautiously optimistic. If you guys like the content, please subscribe to the channel, give the video a thumbs up. Also check out the Telegram channel, which you can find a link to in the description below. One of the most dangerous things that I see in bull markets, generally speaking, is the idea that it always has to go up. And I think in a bull market, obviously, a lot of times you will be right? You'll think the price will go up, it will, and then you keep rinsing and repeating the same cycle. And there's reason to be optimistic. There's reason to be cautiously optimistic. Drawing lines on charts generally isn't that productive because we've seen these lines break time and time again. If you just connect the line, say from candle to candle, we've broken out of this pattern that we were following. Of course, it would not necessarily preclude anyone if it were to dump from here from just maybe redrawing the trend line to look something like that and saying, oh yeah, it's still a downtrend. So what we want to say in this video is the idea of we still need to be cautiously optimistic. We have not yet put in a new all-time high. So in order to do that, we need to go to 42K. If we make it to 42K and then are, pushing higher, 43K, then there's a good chance we're off to the races and we're going to go back into price discovery mode for a little while until we figure out a new area to settle. Until that happens, right? Until we see something like that happen, we of course need to remain cautiously optimistic. We discussed this in the past that in a bull market, holding the 20-day as support can lead to a nice 10 to 20% bounce in the short term. Going below it means you need to be somewhat cautious. And just because you get back above it does not definitively mean that this trend is going to continue in the short term. It doesn't mean it won't, but we can go back and look at plenty of times where we get above it, we hold it as support, we come below it, and then we end up going into some accumulation mode. So there is always the possibility that this is what is happening, okay? So I would say right now, it's better to be cautiously optimistic than to just be blindly optimistic, because while it might work out for a while of having this blind optimism, at some point it won't work out. Now, one of the things we can do is we can look at other similar types of moves. We've looked at these fractals before. One's an inter. Let's switch over to a weekly time frame. One would be an inter-market cycle fractal. The other one would be an intra-market cycle fractal. So let's look at both of those and see where they currently stack up. So we're going to take a bar pattern. We're going to measure it from, say, the bottom to the top here. And then we're just going to shift it over and show the similarities, right? We're just going to show the similarities, not to say that Bitcoin will at all follow this path. In fact, I feel like the one thing you could take to the bank, not that this is financial advice, is that it won't follow this path. So this would be an intra-market cycle fractal. If you want to go back and look at the last cycle, which arguably, measuring it from market cycle bottom is more useful, and looking out at it like this, we can maybe say, okay, well, we've seen this type of stuff before where we go up, we come back down, we test our support for a little while, and then we continue on higher. So the one thing we do know is that the price of Bitcoin will not follow either of these trajectories, but the point is to say, look at how different the trajectories could take us. Both of these are optimistic. Both of them are optimistic because at some point in the not so distant future, it's predicting a fairly nice ROI, right? I mean, if it were to continue to go up like the last cycle, then we'd be looking at around a $300,000 Bitcoin in the next 11 months or so, all the way up here at around 300K. On the other hand, if it were to, say, repeat this pattern, which we saw last year, a year and a half ago, it might take it longer. So, of course, neither of these will likely be true, but what we do want to say is that we need to consider the possibility that we have not broken 42K yet. Okay, once we break it, then the game changes, right? If we break 42K, we go up to 43K, the game changes at that point. But until the game changes, it's better, in my opinion, to remain cautiously optimistic. Now, I'm not using these types of fractals or anything like that to trade these markets. I use the risk metric, which we talk about on the channel a lot. But we're just showing you various points of view. Another thing I want to show is if you look at, I mean, again, drawing lines on charts is not that helpful. We've looked at, you know, this general uptrend here. But one thing you could do is you could ignore that little dip and say, okay, we're basically picking up right where we left off, right? So we're looking at some bullish cases and some bearish cases. Now, this would obviously be a more bullish case, and maybe it would imply potentially breaking 42K in the short term, or maybe it would take it a little bit longer. But another way to look at this, and we want to cover all of our bases so that, you know, we're prepared for whatever happens. Nothing's going to come out of left field on us. If you look at the bull market support band, one of the things we can look at is the idea of we will test it eventually. And we've been saying this for months, but we will test it eventually. You can see over here it took a while between tests. Let's actually take a measured move on the weekly time frame. So from when we got above the 20-week moving average to when we tested it, Bitcoin had moved up a modest 150%. Here, we've already clearly moved up much more than that. You can see if we were to take a measured move from this point up to where the current price is, we're up 255%. If we were to test the 20-week moving average at the same level that we tested it over there, then 150% from that level would actually correspond to around $25,000 to $26,000. If it took the exact amount of time that the last one took, it might not actually happen until April. Okay, it might not actually happen until April if you go to when we actually broke through it. Okay, you can see we came down to it about a month before that. And when you look at this on, say, monthly candles, you know, this entire month would have shown support, and maybe even this month too would have shown some support. But if you're just looking at the weekly time frame, you know, most in a bull market, most moves between the 20-week moving average are, you know, 3 months, 2 months. Here was one that was 16 weeks, 112 days. Here was another one that was 63 days. And then the final one was approximately 140 days. So this is one of the longest ones we've seen when you look at it on, say, the weekly time frame. Obviously, if you switch over to monthly candles, then it'll have a way. It'll basically hide these few weeks and just say, okay, this month tested it, which is when we look on a monthly time frame, we expected it to happen in the not so distant future. But looking on a weekly time frame, if you just measure it from, say, when we left the 20-week here, and by the way, we're talking about the 20-week. We're not talking about the 21-week EMA, so that can change it some. When we're talking specifically about the 20-week moving average, this one was 182 days, and from test to test, it was 151%. From test to test here, if we were to emulate the same exact thing, it could correspond to testing it in a few, you know, by the end of March potentially. If we were to emulate exactly what happened by the end of March, maybe early April. So it ultimately depends on is this cycle going to be a long cycle with, say, these short-term bubbles along the way, or will it be more bullish than the last cycle where we don't test the 20-week moving average nearly as frequently? You could argue that obviously there's already a lot of differences between this cycle and the last cycle. This cycle looks more like the cycle before it, which we don't have on this chart, but this cycle looks more like the cycle before it than say the last cycle. So I mean 2 cycles ago than the last cycle. So if we were to see a move exactly like the one we saw from March of 2019 through September of 2019, then that is a potential path, and that is what it could theoretically look like. Okay, and that's why we want to be somewhat pragmatic about the idea that, okay, there's a good chance it can break 42K and continue higher, but if it doesn't, then this would be the downside we would want to be prepared for. So right now, the 20-week moving average is at 21,842. Obviously, it moves up every single week. It's based on these weekly closes, so we'll keep an eye on it. By the end of this week, we might expect it to be closer to 23,000. So it's moving up fairly quickly. It's not like it'll take it that long to get to the $25,000 to $26,000 range. if in fact that is where we end up coming back down to it. Now, there is no guarantee whenever we do test the 20-week moving average that we would hold it as support, and we didn't hold it as support here, so we have to consider that as a possibility. So what I would say, as always, with Bitcoin, and again, I own the majority of my Bitcoin, is to be cautiously optimistic. You don't want to blindly go in the market thinking that it has to go up, because eventually you will get burned, just like the people in 2019 got burned, just like the people in 2017, FOMO'd in, just like we've seen it happen time and time again. So cautiously optimistic is, in my opinion, the best way to navigate these markets, because you're always ready for the upside. You're always ready for it. You have your stack. You're raring to go. But at the same time, you're not necessarily betting the family farm on Bitcoin at valuations this far extended, because you recognize the potential downside risk. Okay, it's always about at least considering the downside risk, not just blindly turning your back to it. If you look at say 2017, there are some similarities between a couple of these moves. If you go to the daily time frame, let's just pull up the 20-day here. You can look at a lot of these different moves. Like, for instance, where we broke the 20-day and then continued higher. If you just ignore the 20-week, there were plenty of times where we broke the 20-day moving average and then ultimately continued higher. It took us a while to gather ourselves and continue moving up. It maybe takes a month or two or longer before we can continue moving up. Here's a good example of when we broke it in June, and then we did not get above the short-term peak, the local peak, until December. So it can theoretically take a while. Even when you break through the 20-day moving average, it can still take a while if, in fact, the idea is we go into a reaccumulation mode. Okay, it's always a possibility that we go into a reaccumulation mode, and we don't want to discount that possibility. If you look at the top, we've also seen a similar type move, right? We come above it, we drop below, and then we're able to get back above the 20-day moving average in the short term. If we were to take a measured move from the 20-day moving average all the way up, we went up maybe about 12% or so. From the current price, is it about the same? Let's take a look. From the 20-day up to the top, about 14, 13%. Where it currently is, it's up about 7 or 8%. So you can find similarities all across the board. And the joke, right, is that it can go up, down, or sideways. And that's true. We don't know what's going to happen in the short term. And if we did, then it would certainly make trading these markets a hell of a lot easier. While we look at our long-term moves in the market and how we can use those to come into the market when the risk is low and not FOMO in when the risk is high. That's the general idea. Now, if you're a newcomer, you might say, well, what if I'm late? Again, you could always raise your risk tolerance and say, you know what? While you recognize that the short-term risk is always there, you're counting on the fact that over the macro scale, Bitcoin should theoretically still trend up. And I think that is a generally good way to look at it. And if you look at the BLX, and let me hide some of the drawings that I have on here. Let's go look at the regression bands. Over the macro scale, Bitcoin should generally trend up based on what we've seen over the last 10 or 11 years. Okay? So my contention has always been that it's too risky not to hold Bitcoin. It's too risky not to hold. If I were new to the market and did not have any Bitcoin, then there's a decent chance I would slowly enter the market with the expectation of, or I would basically temper my expectations and say, you know what, I'm essentially coming in no man's land here. And when you're in no man's land, it's really hard to say what's going to happen, right? It's really hard to say what's going to happen. We've seen it. I mean, we saw it in 2019. Here we are in 2021. Obviously, we can look back and say who bought the dip, or we'll say, you know, who is the sucker that bought at 42K. And hindsight will obviously make things seem very obvious. So the whole point of the channel is to look at the macroscopic moves, coming in when the risk is low, trying to scale out when the risk is exceedingly high, right? And ultimately we'll see where things take us. So hopefully this video has been useful. We just want to consider all possibilities and not FOMO into the market necessarily every time there's a surge in the price of Bitcoin. We have the premium list. Make sure you check it out. We'll have the altcoin season sale continuing to go on for another week or two. You can find a link to the sale in the description below if you're looking to lock in a lower price. Make sure you subscribe. to that, if you want access to weekly reports, weekly videos, the alerts channel, the risk dashboard, premium-only live streams, and more, you can also subscribe to the channel to see future videos, give the video a thumbs up, turn on your alerts, leave a comment down below. What do you think Bitcoin's going to do? Do you think we're about to push past 42K in the next few weeks and go higher? Or would you like to see a pullback where we regroup and then continue up higher from that point? Let me know in the comments below. Subscribe, like the video. I'll see you next time. Bye.